Thanks a lot. So my talk today is based basically on a recent survey of the economic literature on crowdfunding that is recently published in the Oxford Review Encyclopedia of Finance and Economics, which is titled "The Rise and Economy, the Rise of Crowdfunding." But then I was like, okay, let's talk about the rise of crowdfunding. But then I have to be also honest with myself and with the phenomenon itself. And then I thought that, sorry, Lars, but maybe a better title would be "The Rise and Fall of Crowdfunding." So this is, so this is the title, but I don't want to stop here. So I wanted to talk about the economics of crowdfunding. I mean, talking a bit about some economics of the phenomenon. But then I also wanted to take this opportunity to talk about the crowdfunding research. So actually, the title of my talk would be "The Rise and Fall of Crowdfunding and Crowdfunding Research." So I think it will reflect a bit better what I would like to discuss today. I will talk about the economics and also I will provide some personal reflection on the topic. So again, thanks a lot, Lars, for this opportunity. So let's start with the beginning for me. I mean, I've been extremely fortunate when I was a PhD student that a master's student actually discussed with my supervisor, Armin Schumbacher, at the time, saying, okay, there is this interesting phenomenon that we never heard about. It was, that paper was published in 2014, so it means that we started about 5 years before to work on that. And we found that, okay, we started to collect data. At the time, there were also not many platforms besides Kickstarter, but actually most of the entrepreneurs were directly setting their own website and tapping directly the crowd on their own. However, we had too small sample, etc. But actually, we learned a lot about that. And then we developed this theory paper, which, I mean, we were also super fortunate to have some impact with that paper where we basically show that crowdfunding is not just about money, it's not just about funding, it's also about the flow of information between the crowd and the entrepreneurs and vice versa. And we highlight the importance of community benefit that the crowd is enjoying when participating in the crowdfunding scheme. So the community benefit can really start from the consuming experience if you are a consumer, or from the investing experience. Okay, and then it means since then, actually, it has been a topic and a literature that I followed now for almost 15 years. So what is crowdfunding? I mean, this question is a bit basic, but here's this is my definition of what ingredients are important for a fundraising process to be qualified as crowdfunding. So first, it's a process of raising capital. First thing, it has to be online, and it's a process of raising capital online from a large audience, the crowd, okay? So here, this is an illustration of this idea. You have an entrepreneur, but it can be also something else than an entrepreneur. It could be a politician who wants to raise money for his campaign, can be an household who want to make some home improvement or reconsolidate their debit, their credit cards. Students to finance their studies, etc., etc. Okay, and you have this idea. And then in return, the entrepreneurs give a token of appreciation, a non-financial reward to the crowd, if it's a reward-based model, or a security contract, debt or equity. Okay, and in the case of token offerings, it's basically a token that also represents an asset or a promise, basically, but that lives on the blockchain. But the process, but it's exactly the same. It's also token offerings are crowdfunding campaigns, okay? It's also the process of raising capital online via a large audience. Okay, so here, nothing new. But then the question is, does crowdfunding today still embody this very concept of crowdfunding involving the crowd? Okay, I mean, this is a fair question, actually. And then let's look at the market. So if you look at the market, the different models, so let's start with reward-based crowdfunding. I think it's a model that still strives today with very successful platforms like Kickstarters. And here campaigns are really financed by the crowd of people. So I think there it's fine. The lending-based model actually started already in the mid-2000s with a platform in the UK like Zopa, etc. it has experienced really a fantastic growth over the years. But now, and especially in China, actually, where that really experienced a spectacular growth in the mid-2000s, but basically completely collapsed afterwards. And now, most of that model actually morphed into more into traditional fintech lending model. Just think about lending club, for example, where actually institutional investors are actually financing the entire loans, and now the platform even discontinued the access to retail lenders. Equity crowdfunding, actually, it is super small, and it started very small. I mean, there were some platforms in the UK. In the US, it took more time to actually develop because of regulations, because these are, in a sense, mini IPOs. So, but now it starts to actually to develop, but it remains relatively small. And here, is the crowd really involved? I mean, this is debatable. I mean, is it really a retail investor that actually pledging money to this campaign? I mean, we can discuss that. But here, I mean, actually, a lot of business angel, venture capitalists are actually the crowd in a sense, in many of these. So in a sense, is that the in-person workshops where entrepreneurs were meeting business angel now happens more and more online with platforms like Angel List. I'm not saying that retail investors are not involved anymore, but at least we can ask the question. And then you have what I called in this survey article, the blockchain-based crowdfunding model. I mean, in 2017, 2018, it was the wild west. We had this boom of ICO, etc., and then the market completely cooled down. Okay, and now in the recent years, I mean, the market is regenerating through new forms of decentralized platforms like the IEO and the IDO. Okay, E for initial exchange offerings and initial decentralized offerings. Okay, and here, who is the crowd? I mean, there are a lot of institutional investors like VCs, like crypto funds, etc., and also some retail investors, but are mainly a very specific group of people, I think, of male developers between 25 and 45 years old. So again, the crowd, it's not that diverse as we might think. Okay? So this is a bit my conclusion of the market, and to try to back a bit that with data, reward-based crowdfunding like Kickstarter increase over the years. Now it's almost, I mean, the amount raised every year is close to 1 billion. So it's really impressive, as you can see. I mean, now we are reaching maybe a bit of a plateau, but still. If you look at China, the peer-to-peer lending market, I mean, China, I mean, the mid-2000, 2015, there were more than 3,000, and some estimation even estimate that at much higher, at 5,000 of platforms at the peak. And then the regulators stepped in and cracked down on many of these platforms to completely collapse. Some platforms morphed into traditional fintech lending platforms or moved to other countries like Indonesia, for example. Equity-based crowdfunding now in the US, since the Title III of the JOB Act, the implementation of that Title III, since the second quarter of 2016, we start to see those regulation crowdfunding offerings, right? And now, I mean, the market developed, increased quite a bit until today, and now the market is estimated at, I mean, the amount of money raised via this model is about $500 million. I mean, this is this is not huge, but at least, I mean, as comparable of the BA market, etc. This is not, this is interesting. Okay, so does the very concept of crowdfunding is still there? Yes, but I think it's good to be optimistic, but it's also good to have a more less biased view on the success of the phenomenon. Okay, and I really believe that maybe because I'm mainly studying that, really the reward-based crowdfunding model is the one that is really striving over the years. At least it's a bit my perception of the market as of now. Oh, and sorry, I forgot the ICO market, so blockchain-based crowdfunding. So here you see, thanks to the public good that Paul is providing to the research community, here the TORT database that actually provides a lot of information about a lot of ICOs. You see that it started, I mean, You had Ethereum here in 2014, I guess, and then 2017, 2018, they were really like a impressive IPO with very high proceed, like Telegram with a few billion, and then completely collapsed. I'm talking about under the control of Paul, but to give a bit of credit, now it is regenerating in different form, actually. There are a lot of scams here, but the IDOs are now something that start to be quite big, and apparently some ICO are reappearing, have reappeared in the recent years. And I insist, there were questions actually about that this morning by the discussants, is that actually ICO or STO, or that were the first generation of token offerings. At the time, there were no platforms. We will come back to that, but the role of platform is super important. And that's maybe why now the new generation, in a sense, has resurfaced with the presence of launchpad and platforms, in a sense. Even if some are really decentralized, they play a very important role in terms of trust, etc. But these are nothing else than crowdfunding campaign as well. The token lives on blockchain, but fundamentally it's a crowdfunding campaign. So a decade of studies, what do we actually know? So first, I mean, there are a plethora of studies, actually. If you look at my survey, which is a selected survey, so it's based on most of my readings, etc., it already contained 175 references, more or less. There is a recent survey published in the Journal of Management, which makes a more comprehensive review of the literature by really looking at all the articles in the top FT 50 ranking that talk about crowdfunding. They have 268 crowdfunding articles generating over 49,000 of Google Scholar citations, and with 201 of these articles published in the last 5 years. Actually, I don't know how they made their selection, because the article that I show you at the beginning is not there, and the number of citations would be bigger, I guess. But still, this is really significant. Just the 50 journals, they publish that amount of articles on crowdfunding, while the market is small. I mean, it's not the stock market, it's not the fixed income market, etc. Most of those studies are really concentrated in management, entrepreneurship, and information systems. I mean, economics and finance don't publish much. There are 2 American Economic Review papers in economics nowadays. Finance, they are more interested, it seems, by peer-to-peer lending, I mean, marketplace lendings, or tokenization in finance. So a lot of studies. If we expand that to other journals, it's way bigger, probably bigger than the crowdfunding phenomenon itself. And I think we can categorize the studies in 3 ways. First, you have the ones that focus on the phenomenon itself, the process, trying to understand, I mean, campaigns, the dynamic within campaigns, etc. You have 2 examples of papers here that try to look at the success factors across campaign. One by Astebro that we already discussed this morning, that look at herding behaviors within campaigns, very cool papers. Those set of studies try to understand the phenomenon itself. Then you have another set of studies that looks at the implication of crowdfunding. So it means really like those studies typically merge the crowdfunding data with other data sets, trying to understand the implication. What are the implications for future business development, for the economy, etc. You have this paper by Sorensen, for example, showing that actually crowdfunding leads to follow-on VC investment. This paper by my friend Piotr Danizevich showing actually that some regulation in New York City have an impact on a personal bankruptcy. And then you have papers that use crowdfunding, not really to study crowdfunding itself, but use crowdfunding setting as a laboratory. For example, the paper by Lars actually is not really interesting by crowdfunding to understand the phenomenon, the process of look at the implication, but use that as a setting, a lab in the field experiments to understand what are the preference of investors for financial returns versus value or etc. A paper by here, marketing scholars who is at my school, who really look at how neural features, components predict aggregate choice using crowdfunding as a setting. So these are basically typically the type of studies that you can see in the crowdfunding literature. And now I would like to provide some random rants or some reflection about those three types of categories. First, when it comes to the process, I think we know quite a lot about the process itself. I mean, if you want to make a big contribution, maybe it's not that wise to try to understand really the phenomenon itself. There is a lot of literature already on that. However, it's a bit contradictory, but at the same time, I think that there is a lot that still has to be understood and to be done in that, or at least there are a lot of limitations in that literature as well. I think in terms of data quantity, surprisingly, crowdfunding happens online, so it means that it leaves a data trail, and many studies still relying on very small, limited data set. In the world of big data, etc., I mean, we should really, the interesting thing, we should rely on much bigger data set, and typically what it is not observable typically matters a lot. I mean, the fact that some platforms are selecting some campaign to be put on the platforms, there is a reason behind it, creates a selection bias, etc. So I think there, a lot can be done. Also, in terms of platforms, many studies are still relying on one single platform. We should replicate our studies in different contexts, different platforms, etc. And also studying the interaction, the interrelation between platforms, trying to identify backers in one platform and then move to another platform. Same for entrepreneurs. We should be able to have that kind of information, I think. So I think here there is scope for replication, even reproducibility of research. I think this is important. The implication, this set of studies that look at the implication of crowdfunding, I mean, whether going for crowdfunding versus trying to get a bank finance, for example, leads to a better performance, more innovation, etc. All those research questions are super interesting, but I think they fundamentally lack credibility. So here, I think this literature has to do its own credibility revolution, if I may. And I think here causal inference is really needed and more because they have some implications for policy. So it means that if you are then going to policymakers, trying to understand, to make advice, etc., I mean, causality starts to matter to a great extent. That's why economic theory, especially theory in platform economics, etc., here it's important to link the finding to the model. And then maybe, I mean, there are just one or two papers that I'm aware of that really using structural estimations. Causality above is really about what happened in that context, okay? If someone back a project yesterday, I mean, what's going on to the next contribution? But then we could estimate that a bit more in a structural way. I mean, really building models for counterfactual. What if, okay, if I change the fees from 1 person to 3 persons, what would happen? So really testing the deep parameters of the model, it's also one way to go. And those reflections really comes from the idea that sometimes we consider that the macro level evidence have an impact on, leads to the same conclusion at the macro level. But I mean, at the micro level, we could observe that actually, yes, a successful crowdfunding campaign leads to entrepreneurship, I mean, business development, consolidation, etc. But it doesn't mean that actually. Hello? Yeah, so, because I have a paper on that and I got rejected, basically because there is no contribution and even the editor and the referees didn't get the point of even studying that question of, okay, whether actually the emergence of some crowdfunding platforms in specific territories had an impact in the aggregate on entrepreneurship. It might seem that actually crowdfunding leads to entrepreneurship. To me, I just don't know that. I'm not so sure, actually, even if we take that for granted. And I don't really know studies that really look at the impact of crowdfunding on entrepreneurships. Because, I mean, it's like, it's not because you find a positive impact of crowdfunding on entrepreneurships that it really affects positively entrepreneurship. First, it's interesting to know what is the size of the impact, whether the effect is small versus big, and to be able to estimate that. But also, it's like, I mean, if you have suddenly a crowdfunding platforms that inject money in the economy, in a sense, Does that mean that there will be more entrepreneurs as a result? I mean, the money has to come from somewhere, probably from bank deposits. So it means that at the same time, banks are not necessarily able to lend that money to other projects. So it's not clear that actually in the aggregate, the presence of crowdfunding in the US, for example, increase crowdfunding. And here you may need some more credibility in terms of identification, but also maybe some structural estimation. Okay, so that's my point about micro versus macro. And then the laboratory, I think it's great to use crowdfunding as a laboratory, but here those studies have to be also very careful in the sense of whether that laboratory has potential to study what it is expected to be studied. I mean, sometimes some papers try to test some economic theories of psychology theory by taking for granted that actually backers communicate with the entrepreneurs in chat box, etc., whatever. But is it really the case? I mean, sometimes you don't really have the variation that you might expect in certain crowdfunding laboratory. And then is the question of the external validity, whether that setting actually is sufficiently good to derive implication to other context. This may sound a bit critical. Don't worry, I'm extremely optimistic about this literature. I'm super excited about the very concept of crowdfunding. I mean, this is really great. It's really, I mean, it promotes this idea of a direct connection between entrepreneurs and backers or investors or lenders. But yeah, where do we go from there? From here. So, and here, I would like to highlight some area in this literature that I think would deserve further attention, but because they receive much less attention. It's a completely biased view because I have papers that at least relate to those 3 points. One is really about market structure. I mean, why do we observe some concentrated crowdfunding markets in some countries and less concentrated market in other countries, etc.? What are the fundamental drivers of that? The real effect, I still believe that we don't know much. That's why I was happy to see some papers about post crowdfunding campaign outcome. Actually, is it really the use of crowdfunding that leads firms to grow faster, to innovate more or less? So I think in terms of real effect, there is a lot that could be done. And then I think, I mean, I'm not necessarily a huge believer in Bitcoin or crypto assets, etc. Quite the contrary. But I think blockchain and the promise of tokenization in the context of crowdfunding is really interesting when it comes to the efficiency of the transaction process, but also think about equity crowdfunding. I mean, an enduring limitation of the development of equity crowdfunding is that there is no real way in most platforms to exit for investors. And here, actually, blockchains and its interoperability, the possibility of secondary market is suddenly possible with that. And here I see, and it was a good example, your paper presented this morning, Paul, about the potential of blockchain or tokenization in the context of crowdfunding. I will talk, in the interest of time, only about the market structure and present a bit some of the findings of this recently published paper by with my great co-author, Paul Belflam and Armin Schwimbacher. And then also a very recent project. We ran the regression 2 days ago. So with those guys. I won't be able to present that paper, but the paper is available and there is much better work, especially the paper that was presented this morning on the last topic, so I will skip that. Okay, market structure. Oh yeah, maybe don't hesitate to ask questions during the talk. I prefer maybe, yeah, don't hesitate to interrupt me, okay? Okay. I think crowdfunding platforms, the platforms are extremely important, okay? They are usually presented as matchmaker. So it means that platforms intermediate between 2 groups that need each other in some way. The entrepreneurs on the one hand and the backers or the investors or the lenders on the other hand. Okay, they need each other in some way. Okay, so which makes those platforms as multi-sided or two-sided. Okay, on top of that, there is the presence of network effect. So it means that entrepreneurs are interested to be on the platforms because they value the fact that there are other entrepreneurs on the platform that will actually attract backers on the other side. Okay, so network effect is really something important. Network effect is really this idea that you value you value a product or a service, not just for the product or the service itself, but because other people or other users are also consuming or using the service. Just think about Facebook. You like Facebook not just because it's a nicer interface, etc., but because all your friends are also on Facebook. Okay, so you derive values by the presence of other users on the platform. This is the same with crowdfunding. Entrepreneurs value the fact that there are many backers on the other side of the platforms, and also potentially that there are many other entrepreneurs on their side of the platform, because it can increase the presence of backers on the other side. These are indirect network effects. And then the third condition is that for platforms to be qualified as a multi-sided is that the platforms solve some reduced transaction cost or leads to lower transaction cost as a situation where all these parties would interact in a bilateral way. Okay? And as I said, crowdfunding platforms put the entrepreneurs they attract into a situation of co-opetitions. Okay? So first, having a lot of entrepreneurs on the side of entrepreneurs leads to more backers on the platform. So it means that all entrepreneurs are happy because there are more backers on the platforms, more activities on the other side. So this is the cooperation part. But at the same time, they compete between each other because in a sense, they're competing for the same dollar. Whether this effect is positive or negative on the net is an empirical question. And the interplays between these two conflicting forces is affected by the dynamic nature of crowdfunding campaign, okay? Meaning that the campaigns, last for several days or even months, and the propensity of backers to base their decisions on each other. Backers are observing the behavior of other backers when they make decisions in general. And in this paper, what we do? In this paper, we actually examine the effect of cross-project spillovers. So that is the mutual impact of that project exerts on one another, okay? Whether projects that are active on the platforms at the same time than another campaigns affect the number of contributions received by the platforms at the same time. And then we explore the transmission mechanism. Because all these effects are really, it produces to an array of network effect. We provide an analytical framework to disentangle all these various effects. And in terms of empirical analysis, what we have the French reward-based crowdfunding market, which is like a duopoly where you have two big platforms that actually started almost at the same time, Ulule and KissKissBankBank. We have that. And then all the other platforms are super small platforms, really active in niche market, like just for organic product or in games, etc., but are very small. You have basically those two big players, a bit like Kickstarter and Indiegogo at some point in the US. And we have data about those two platforms, proprietary data that the manager of those platforms provided to us. So it means that for Ulule, we have more than 1.3 million contributions on 24 projects. And we have the exact same information provided by KissKissBankBank. Yeah, I know the name is a bit weird, but 0.6 million of contribution on 14,000 of campaign. Okay, so it means that the granularity of the data is great here because we know that if Lars contribute at time t, and I contribute to the same project at time t+1, which is like just a second after, I can observe that as an econometrician. Okay, so which is really good to test some within campaign dynamics, but also cross-project or cross-campaign dynamics. Okay. This is what we do in a dynamic panel data settings and diff estimations. And what we find is that we provide systematic examination of funding dynamics. First, we confirm one of the core results in the crowdfunding literature, the existence of what we call within project dynamics, which has been shown, it's not really a contribution, but it has been shown in previous work that actually past contributions have a positive impact on future contributions. And the order of magnitude is actually very similar to the one that you have uncovered in your meta-analysis. And then the novelty, at least in terms of contribution, what we find is that actually we also find the existence of cross-project spillovers. So it means that contributions that are made yesterday on a project on the platforms affect positively the next contributions on the focal project. So which I think, but okay, I might perceive my papers in a very biased way. I agree that, but which I think is an important, I mean, don't want to be arrogant. It's an interesting result because fundamentally it really justifies the role of the platform. If such cross-project spillover didn't exist, then you could say that, okay, but the platform is not really essential because entrepreneurs and backers can actually lead to the same outcome without the existence of the platform. Here, because you have the platform that can actually aggregate all the campaign at the same time and all the backers, it means that there is a value of having a platform.
How do you justify that that's the role of the platform? Because, maybe we don't need, you have the open here, and let's assume we would not have platforms and these projects would raise all individually. It would still be those projects spillover. So where does the platform come from?
Ah, yeah, sorry, no. Yeah. Here the result comes on Ulule and on KissKissBankBank, we observe that effect of cross-project spillover, okay? A project on Ulule, the campaign on Ulule at time t affect the number of contribution made on the focal project at time t+1 on Ulule. And you observe the same effect on KissKissBankBank. All the results are replicated with KissKissBankBank data. Here, I interpret that. It's more my conclusion. It's justify the role of the platform because if you have just an entrepreneur making its own website and then trying to tap backers on its own without platforms, you cannot have this positive spillover effect. Okay, but here you don't need several platforms. That result you can obtain by a single platform analysis. And most of the analysis we made all the analysis on Ulule, and then we replicate everything on KissKissBankBank. We don't really use the cross-platforms effect. That could be also interesting, by the way, but that would be something interesting. The thing is that we cannot, the identifiers for backers on Ulule is not the same on KissKissBankBank because we got the data from the two sources separately. But that would be actually interesting to have that kind of information and to see actually how backers are using several platforms, etc. That would be exciting. And then we try to look at the mechanism. What can explain that? And we provide some evidence that actually backers that are recurrent on the platforms that are typically contributing to several projects are a key transmission mechanism of this effect. Because on Ulule, unlike Kickstarter, you can actually observe whether or not the backers contributed to some active project or past project. So you see that. So it means, and we conclude in the paper, that they are really a source of internal growth of the platforms. And they are really, they lead to really social learnings on the platform. So this is a bit of our conclusion. So why we care, actually? But first, in terms of platform management, I think this is interesting because the success of a platform depends not only, platform basically maximize the quality and the quantity of projects on the platform because their fees is linked to the number and the quality, but also it has some implication because it also shows the complementarities between projects. So it means that actually platform managers could actually maybe be a bit strategic in the type of project that they put at the same time on the platforms because of the presence of cross-project spillover. And also the idea that it's very important for platforms to leverage on the positive effect of recurrent backers to make sure to make them loyal, etc. Because they play a very important role on the success of company. And then I think, and it's here, when it comes to market structure, that I think we have some interesting implications that are extremely suggestive. So is that when it comes to platform competition, what it is interesting, I think, is that whether network effect or this cross-project spillovers and within project dynamics, it's not clear ex ante whether those dynamics are positive or negative. But if they are positive, these are very strong force that leads to the concentration in the market, because it's a bit like a winner-take-all type of market. However, if we would have observed some negative cross-project spillover or some negative within project dynamics, that could be the case if the competition part is bigger than the cooperation part between entrepreneurs. We could have that. This is a good force that would lead to more competition in the market, to more platforms on the market. And here, at least, we provide one explanation for that. Yeah, but I can repeat your.
T plus one, for example, 10 from, they are recurring.
Yeah, I mean, we show that in the paper. I mean,
okay.
In our econometric analysis, actually aim at showing that. Basically, that the number of past recurrent contributors positively impact future contribution much more than the number of one-shot or new backers. This is what we show. At least we convinced the referee. It was a long project. Actually, we started. It took us almost 8 years ago to publish that paper.
One thing building on all that, the fact that maybe there is also some spillovers in terms of cross platforms, meaning that if you compute something like a market hotness indicator for a given day, so how many campaigns are run on the two major reward-based crowdfunding platforms in France, once you are able to disentangle recurrent backers and so on, if you have this hotness indicator, you would be able to understand if there is one platform that is able to concentrate the overall fear of missing out of the market that there is on a given day. And by doing so, maybe you can exploit these dynamics of concentration, spillovers, even much more, and it doesn't require to have the same identifier of backers from one platform to the other. Maybe Astebro is something like that, like an intraday hotness indicator, if I'm not wrong.
Yeah, it's a great idea. Astebro doesn't have several platforms. They just focus on CDirt. That's it. To all credits, they focus on equity-based crowdfunding. So it means that they have much less contribution every day per project, because it's an equity-based crowdfunding platform. There are less project lists of feature on the platform at the same time and less activity on the platforms every day. In that sense, we have better data to test what they are testing. But the papers are really a similar conclusion, and it's a better paper. I mean, their theory is like very, very deep, and I like the paper a lot. This is good. What we do in that direction doesn't address your comments, but in terms of identification, we try, I mean, you might say that it's a bit endogenous, but we try to really look at what's going on the platforms when there is a blockbusters arriving on the platform. That was really unexpected before. Just the day, so we basically, if I recall correctly, we try to identify the project that generate like more than 500 of observation on the first day of the campaign, and to see how it spillovers across the platforms. And then we do some search, so there are around 30 or 50 a project like that, and we do some search on the internet to see to what extent those projects were promoted outside the platform before they arrive on the platform. But we do that to strengthen the identification. And I think it's kind of, I mean, reasonable. But then implication for platform growth, because those two platforms, remember, they started almost at the same time. The inception for both were around January 2010. Here, very suggestive. We just plot the total contribution made by project backers every month for the two platforms, Ulule and KissKissBankBank. And we differentiate between recurrent backers in red and the new backers, those that are only contributing once. First, you see that new backers, people that just come from backing one project, is much higher than the recurrent backers. So that's why, so that I think is already something that we know, but it's good to remind that those guys just come, they open the website, they contribute, and then they are out and they do something else and they never come back. They represent a lot. It's a part of the crowd. But what you see here, very suggestive, is that actually Ulule seems the growth of recurrent backers was higher on Ulule than on KissKissBankBank over time. Well, they really started at the same time, and they are pretty similar platforms in terms of size. So what does that suggest? That actually perhaps Ulule took some market share over KissKissBankBank slowly over time, potentially driven by those recurrent backers. And then when we compare, actually, the number of contribution of Ulule, we take the difference between the total number of contribution made in a day on Ulule minus the total contribution made on KissKissBankBank on the same time. If they were growing at the same time, we should see that, okay, the difference should be more or less zero, which is the case at the beginning, but then it starts to increase slowly over time. So it means that Ulule grew faster than KissKissBankBank, and this is what we observe and in the data. So it means that's why looking at different platforms in a specific market has interesting implication when it comes to market consolidations, why we have two platforms in France and not 15 or just one, etc. And this is what we have published and accepted less than a year ago, and we were very happy with that. And actually, 1 month after the paper got accepted, this news in the French media. Actually, kind of, I mean, you cannot, I don't think that there are many people speaking French, but basically what it says is that Ulule took over KissKissBankBank on December 2024. So meaning that actually, I mean, I'm not saying that this is what we show, but actually it's really consistent with our story, and it is kind of interesting and show actually what, it's my point ultimately, is that looking at replicating studies in different platforms, trying to, I mean, can say something really about the market structure, and it's potentially interesting. So that's why I typically like presenting that paper. Yeah. Questions? No? Yeah, so it's really literally the platform Ulule took over. It's a main competitor, KissKissBankBank. Okay, and I will conclude. Yeah, I have 12 minutes. I don't know whether I have to keep time for questions. So, okay, so I will be very quick here on the real effect. So I think there is a question, but which is really an interesting question and a very valid research question, but so obvious. And I think there are so many papers on that. But the thing is that, first, I mean, you have this very early survey made by Kupsuwami and Moluk in 2014. They basically took they surveyed some entrepreneurs who raised capital on Kickstarter, and they basically asked a few questions. So, and basically one of what they say might be an upper bound of the effect, but they show that actually 90% of successful Kickstarter projects remain ongoing ventures. One finding which is interesting, I think. And then on equity crowdfunding, we see some paper. For example, I took one randomly. It is one. Show evidence, I mean, from a sample of 250 startups funded on Kickstarter, on Crowdcube and Seeder, that typically they have relatively lower performance and higher failure rates, but are more innovative than a match startups that didn't raise capital on equity-based crowdfunding. That is one thing. And then there's another paper by, sorry, I don't know the authors, Eldridge and colleagues. They show evidence from a sample of startups funded on Crowdcube. Actually, should be more or less the same sample, right? And that they have those firms. It's a different setting, etc. Their control group is different than the first paper, but still, the conclusion is that they have higher growth of opportunities, performance of small firms, but there is no effect on innovation. Fine, also interesting, but I mean, if I'm a policymaker, or if I have to advise some policymaker about the importance of crowdfunding, etc., what should I conclude? I mean, is it good or not for business? It's kind of difficult. And this is really, I mean, can only be modestly addressed concern about causality, mainly because those two, they rely on very small sample. I don't blame the authors at all. I mean, I would have done probably the same with the kind of data available at the time, etc. But I think we have to come, as I argue at the beginning, one step further to really be able to say something about causality. And in this very recent paper or project, we basically addressed the same question. We examined the effect of launching a RegCF offering, so those are equity crowdfunding campaign in the US, where you have a lot of platforms, on business development, okay? On survival rate, on performance, and maybe we'll extend that later on to innovation, etc. So here we have the data that I showed you at the beginning and the graph for the RegCF offering in the US. And we have about, in terms of amplitude analysis, our sample, we really take all RegCF offering, which is about 60,000 of offerings in the US from the implementation of Title III of the Job Act. We got the data, I mean, that we manually collected from Edgar Form C filing from the SEC. Because they have to file, we have information about their balance sheet, their income statement, etc. But for the failed project, they don't have to file anymore. So what we did here, manually, we collected information about those failed crowdfunding campaign, okay? To be able to compare successfully funded startup and unsuccessfully funded startup. And here, basically, in terms of method, we have a panel estimation within a windows around each campaign of -1 year plus 2 years. Okay, so this is the windows that we are collecting. So we have already information. It's a panel setting that we have. And we instrument, because here, first, the decision to launch a campaign or to withdrawal, it's a decision. Okay, so it can lead to a selection bias. And also, reaching the target goal or not, it's also the result of decision of investors, right? So we have to instrument that if we want to be credible in terms of causality. And here we borrow from the IPO literature, and in particular, a paper of Bernstein and actually a recent paper in the RFS by my colleague here with Gordon Phillips, applying the same thing also on IPO. We look at actually whether we try to instrument whether a campaign is successful or not, using actually the stock market returns in the months prior to the launch of the campaign. And it means that here the idea is to find a small, plausibly exogenous shift in investor preference or behavior. And it means that those who were at the margin of failing or reaching the target goals could have been nudged in a sense by investors. Okay, so we are really focusing on those campaigns that were just likely to win or to lose, basically. This is what our instrument is actually capturing. Okay, so it's not about the average treatment effect, it's really about the local average treatment effect. Okay, those firms that are actually, we are really focusing only on the compliers, those firms that are actually affected by the instrument. This is the one, and what it is important is that the firms that are actually failing are driven by the negative stock market reactions, stock market return, and the one that are actually winning, it's partly also affected by the positive stock market returns. And some result that we just ran 2 days ago, so it's very preliminary, and so don't laugh at me. We look at profit, whether the firm is still profitable. We will have later on other proxy for performance, but basically what you see here, you see that after the launch of the campaigns, in the 2 years following the campaign, we can extend the windows, of course. You can see that the basic OLS, so the endogenous regression, shows a negative and insignificant result, really like in the Bernstein papers on IPO, actually. When here you have the second column, you have the first stage. So whether the NASDAQ return one month before the launch of the campaign the instrument is actually positive and strongly predicting a success. You can see the F-stat of the first stage. And the second stage, you have here the effect, which is negative and quite strongly significant. You might say, oh, wow, the effect is really big as compared to the endogenous OLS regression. But remember, the instrument is not the average treatment effect that we are capturing, it's the local average treatment effect. So only for those firms for which the instrument is actually effective, the so-called compliers, okay? And here, this is the reduced form. So, okay, when we regress the instrument directly on the profitable measure. So it means that here you can see that actually, I mean, if we really want to understand, I mean, whether raising capital using equity-based crowdfunding has a positive or negative impact on business development, here by instrumenting that, it means that it's probably actually negative, that you may actually finance more lemons or firms that shouldn't have received money in the first place. And actually, this is what we also confirming that when the stock market continued to thrive, we see that actually those firms that were also at the margin, they're also less likely to get post-financing in terms of additional equity crowdfunding rounds or VC financing, etc. And basically that's it. I mean, it's the first exercise, extremely preliminary, but that shows that actually looking a bit more at some causal identification, which might not be perfect, you can complain about the instrument, etc. We are working on that. But at least what is important here, we really look at all campaigns that have been launched in the US since the beginning. Okay, and this brings to the end of my talk. And as a conclusion, I mean, I just don't want to reiterate what I just said. I think crowdfunding is really a great alternative to finance new ideas and projects. It's more than just funding. It's really about this flow of information between entrepreneurs and the crowd. The literature, I mean, the evolution of the literature has been extremely exciting to participate in that literature. I learned a lot personally. I also think that sometimes it grew a bit at a faster pace than the crowdfunding phenomenon itself. But still very interesting. There are three categories that you can put, I think. It's my personal view, of course. Some interesting area that await further thinking are market structure, real effect, and tokenization on the blockchain. And yeah, I think, again, if we would like to inform policy in a credible way, I think we have to take part as well of this credibility revolution, in a sense, that you see happening in finance and economics. Again, don't take me, I'm talking with the background that I have, etc. It's something that I hope to see in the future. But again, my excitement to work on crowdfunding is that it really opened my eyes of economics by reading a lot of stuff coming from management, entrepreneurship, etc. And it has been very rewarding. So thanks a lot for your attention. I hope you enjoy the talk.